You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back, not with just a double header today on the network, but a triple header, in fact, a quadruple header, if you factor in our new show hitting after the close. My name, of course, Mark Longo, coming at you from theoptionsinsider.com, as well as from the network that continues to grow, adding more shows all the time. The Futures Rundown is already kind of a new addition to me, but we've added 2 new shows since then, including the European Market Brief that we recorded yesterday. Should be hitting you as we speak. And then, of course, every day after the closing bell, coming back at you with Thor, a.k.a. the Hot Options Report, breaking down all the action out there in the market that day. And there's been a lot of wild stuff just in the 2 weeks or so that show's been running. So you want to check all that out. Make sure wherever you're getting the show, you're subscribed to the full network feed. That'll get you over a dozen shows now. As well as, of course, if you're ready, if you're willing to really take on the pro Q&As and, of course, dive in on some weird and wild activity, maybe submit some of your own trades to talk about there on the old Options Oddities. You get early access to all of our quadruple header that's going up today. You folks already hear it in your ear holes. If you miss anything, you got the pro podcast feed. And then, of course, awesome giveaways. Only one place to get it all, the optionsinsider.com/pro is the place to go as we go around the horn to see who's joining us on the old Futures Rundown this week. I am pleased to welcome back our old pal, Miss Carley Garner from DeCarley Trading. Carley, how are things going in DeCarley land, madam?
Hey, Mark, good to be here. No shortage of things to talk about. Markets are hot.
What's the hot thing right now? What are folks calling up about in DeCarley land that they have to trade right now?
You know, for the first time in my career, I can say feeder cattle is the hot commodity.
Wow, you threw me a curveball. I did not think, I thought you'd go equities, maybe some rates, maybe something wild like a crypto. I did not have feeder cattle on my list. I like it. That's why we do the shows, listeners, and that's why we enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everyone, welcome to the trading pit, the portion of the show where we tell you what's lighting up the tape to the red and to the green out there in the world of futures this week. And Carley, this is where I usually ask folks, what's catching your eye in the world of futures? But I think we all know feeder cattle. So let's dive in. What is catching your eye? What are the folks calling up about in the world of feeder cattle?
Well, we deal with a lot of farm hedgers, ranch hedgers, and so as great of a time as it is right now to be a cattle producer, it's also a very difficult time to manage risk and hedge their price risk because there's two basic forms of hedging: buying puts or selling futures to lock in your price. And anyone that sold futures is having a hard time meeting margin calls. So it's not all fun for producers, even though in theory their cash market position is making a lot of money, probably more money than they've made in their careers.
Yeah, you're right. You look at that and you're like, oh, they're doing well. They should be happy, right? But the flip side of that is you have to cover that. And so that could be a wee bit challenge. There's no free lunch out there. Even when your markets go up, Carley, it could still be a bit of a bear.
It's a tough game.
Well, outside of the sexy world of feeder cattle, anything else lighting up your tape this week, madam?
Well, we've got our hands full there, but we are paying attention to the grains. I think, this is the time of year where you start to see grain bottoms, and we just so happen to have corn and wheat at multi-year lows. So those are starting to look a little attractive to us.
All right, let's see what's looking attractive out there in the futures pits this week, listeners. Even though they don't really exist anymore, it still sounds cool to say trading pit, doesn't it? Let's go to the upside first. Let's keep things on a positive track. Carley already named one of our upside movers this week. Can you guess the other four? A spoiler alert, it's, I'm trying to think, well, with the exception of one, we are 4 for 5 in the ag and ag adjacent complex, listeners. So I'll let you mull over that for a little bit as we get to number 5 on our weekly upside movers. We got our old pal corn, up a little over 2, about 2.14% on the week. So a little bit of a bump for corn. 2%, not much, but it's enough to break into the top 5 this week. Again, it is the dog days of summer after all, listeners. If you're looking for all bangers, 20+% moves in a week, not the time of year for that. Number 4, we got our old pal live cattle, up 2.35%. So the flip side of the feeder cattle coin is, of course, live cattle. Then we got the lone non-ag energy player here in our upside 5 for this week. Good old RBOB, up about 2.5% this week. Number 2, Carley's favorite, maybe some of our customers' favorite / least favorite. It's feeder cattle, up a little over 3, about 3.07%. And the banger this week, not the news our Starbucks fans wanted to hear this week. We saw a little bit of a reprieve in coffee, and now we're right back to the upside. Coffee up nearly 13% this week, about 12.89%. So once again, maybe you brew it at home. You save the Starbucks trip, and maybe you get some nice, cheap drip coffee. You save the premium French press for another day. That said, Carley, we got feeder cattle in there. Also got live cattle. We got RBOB, corn, and coffee. What's catching your eye in our green top 5 this week, madam?
So I have 2 things to say. Coffee obviously is having an amazing week, up 13%. But if you look at a chart, there's kind of a line in the sand there. Anything above $3 tends to see coffee get wildly out of control on the upside. So market's a little overbought, but if you're someone that's trying to fade that, I'd probably be careful. I probably wouldn't do that because the last time we broke above $3, we ran all the way to $4.20, and we may get a repeat of that. So be very careful. Lastly, I'll just mention the upside list, aside from coffee, is very meager. I mean, we're seeing 2-3%. I think part of that is the fact that if you look at commodities in general, they're suggesting deflation, not inflation. Like if you look at copper, natural gas, crude oil, everything's kind of struggling to put green on the screen. And that's a deflationary environment, even though everybody's talking about the inflation side.
Yeah, that is an interesting trend. And speaking of the downside, let's check out what's lighting it up to the red out there this week, listeners. Number 5, we've got our old pal soybean oil. Soybeans have been an interesting one to watch. A lot of heat. The Soybean Association sending heated letters to DC out there based on the tariffs we're seeing out there right now. So soybeans and all of its various complex moving parts out there, including the oil, very much in the crosshairs right now. Oil coming in about 3.33% this week. Then we've got a combo for number 4. It's the big and the micro Bitcoin futures. Crypto, after just lighting it up last week, for the first time in the history of this program, we had a crypto product, in particular micro Ether futures, breaking into the top 10 on the show. That was wild. We'll see if we get something like that this week, listeners. But crypto kind of across the board, taking a bit of a break. Bitcoin, the big and the micro futures off about almost 7.5% this week. Number 3, out to cocoa we go, off about 7, almost 7.6% on the week. Number 2, it's one of the EMs. Can you guess which one it is? And the answer, listeners, is lithium, off nearly 8%, 7.8% to be precise. And then we have a tie for the number 1 spot, 2 contracts coming in. You can probably guess when I talked about what's going on in crypto, what is the number 1 downside mover for the week? Yeah, it's Ether. After having just a tremendous run, a tremendous week, getting up to north of 4,700, I think 47, 75, 76, somewhere in that range, kissing 4,800, coming back to earth a little bit this week, off about 9 and 9.25%, depending on where you're looking out there. So just an absolutely wild run out there for crypto. You can't be mad, even if you're giving some back, listeners, when you hear some of our year-to-date breakdown in a little bit. You still can't be mad. But that said, Carley, anything catching your eye in our bottom 5 this week?
I don't have any ponies in the crypto race, but I can't help but notice every single time I come on your show, Ether is either the biggest winner or the biggest loser. So it's obviously an insane contract.
You guys don't have a lot of crypto slingers over there in DeCarley land?
We really don't. We tend to be, we kind of have more option traders than futures traders, and there's the crypto options just aren't there yet as far as liquidity and the ability to spread and things like that.
No, if you're trying to get the options going on the crypto side, not quite there yet. That said, I was talking with the folks from Coinbase on our crypto show on Monday, and I was kind of putting their feet to the fire a little bit because they did just buy Deribit, and Deribit is the biggest crypto options platform in the world. They're just not really approved here for trading in the US. So I was trying to put their feet to the fire a little bit so we can get some of that liquidity over here. It would be nice. I mean, there are options on the CME futures, but not exactly lighting the world on fire. So it would be nice to see the biggest pool of crypto options liquidity come over here. That said, if you're looking for, a little bit of crypto options liquidity, IBIT certainly filling that bill right now, over 500,000 contracts a day. So if you're interested in Bitcoin exclusively, that's one way to go. So there are ways you can play them, listeners, on the options side, just not so much with the futures yet. But we shall see. We shall see, listeners. Speaking of seeing what we'll see, let's get out there now and see what's lighting up the tape out there this week with our top 10 most active. Is it another wild week for crypto or some other product to break into the top 10, or is it pretty much going to be all equities and rates all the time? And I think we're leaning more towards the latter of that, listeners. That said, it's a decently active week. We use that barometer of somewhere around 300,000 contracts as our kind of, is it an active day or not? And we were north of that to start the show today, listeners, right around 370,000, 368 to be precise. That gets you to number 10. So a decently active day, and otherwise, dog days of summer, not a day you would expect a lot to go up. That gets us to the Ultra T-Bond. And again, looks like this week, because spoiler alert, no 3-month SOFR on our list this week. So we have nothing going on outside of September. It's all September. Usually we have one DEES contract, in there, and it's 3-month SOFR, but not today. So all September, all the time. Number 10, the Ultra T-Bond, 368,000 contracts. Number 9, going out to the 30-year, 388,000 contracts, all the way at the far end of the yield curve. Number 8, keeping it in the rates, it's the Ultra 10-year, 500,000 contracts almost exactly. Number 7, it's our old pal, the NASDAQ 100 E-mini, 601,000. NASDAQ taking a bit of a drubbing out there yesterday. The tech gods came for their pound of flesh yesterday. I think we were off somewhere in the ballpark of 1.5%, and looks like closing in on another 1% today. So not been a great time for the bulls out there in the tech-heavy NASDAQ, and that's being reflected in some of the volume. Again, number 7, NASDAQ, 601,000 contracts. Number 6, back to the rates. It's the 2-year, 878,000 contracts on the tape. Number 5, to the land of equity micros we go. It's our old pal, the S&P 500 micro, 1.1 million. So this is actually a pretty dense day, listeners. Already at number 5, and we're already north of 1 million contracts. Now, again, these are micros, so take those numbers with a grain of salt. But number 5, north of 1 million, usually it's maybe their top 1 or 2 that are north of 1 million. So all said, it's a decently active day out there today. Number 4, the S&P E-mini, about 1.25 million contracts on the tape. Number 3, out to the 5-year. We don't talk the 5-year that often, except when we do these volume breakdowns. A 5-year, 1.32 million contracts on the tape. Number 2, our old pal, the 10-year, falling to number 2. What could claim the crown from the 10-year? If you listen to the show once or twice, you can probably guess. But the 10-year falling to number 2, 1.35 million. If you're in on all things 10-year, maybe you're a little bit confused by some of the nuances of it, or maybe you're intrigued by it. I did a deep dive with our buddy Dan Gramsel. It's on the feed right now, so if you're a newer listener to the show, go back a few episodes, and we talk all things 10-year. You can get on the boat with the 10-year note, as our pal Uncle Mike likes to say. And then topping the list, again, a bit of a cheat because it is a micro, but at the end of the day, volume is volume, and if we kept stripping the micros out all day, A, it would be a ton of extra work for our producers, and B, it would not be a representative sample because these things are trading. It's the NASDAQ 100 micro, lighting it up, 1.55 million. Again, that is really the only product that seems to be able to vie with the 10-year for the volume 3, even though the 5-year making a nice run of it today. Carley, are you A, surprised like I am that it is a decently active day here for August 20th, the dog days of summer? And then B, what's catching your eye out there in our top 10 today?
I would say normally it probably is odd to see this type of volume on just a random Wednesday in late August, but I think a lot of this has to do with the fact that the Fed minutes were released today. And so we have a lot of, we're kind of in the market mode of trying to predict what the Fed's going to do next. And, I think that's probably a lot of where this volume came from.
Speaking of the Fed, we've had some inflation numbers since the last time we chatted. Everyone and their mother is venting their spleen on the Fed, so I'll give you your chance to do so if you like as well. Seeing these inflation numbers we saw recently, they were hot, but maybe not as hot as some people feared. So some people thought that really gave the Fed a lot of ammo to maybe cut rates more aggressively. Others thought they shouldn't be cutting at all because, inflation is still hot. What are your thoughts? Where do you fall on that divide, Carley?
It's complicated. Obviously, that's the easy answer. But there's kind of two stories here. Assets are inflating. So stocks, real estate, crypto, those types of things are inflating. We can't argue housing. Nobody can argue those things. But if you look at the bottom half of the economy, I think that there's a lot of sluggishness going on, and the higher interest rates are probably working, and not probably, they are working against the common household that's struggling to get by. So I would be in favor of a rate hike despite asset inflation. I think that's going to happen regardless of rates. I think that would, I think that those are two different stories. So that's my view.
You want to go the other way. You want a rate hike.
I'm sorry. Nope. Rate.
I was like, wow.
I apologize.
I did not expect that.
Thank you for clarifying. No,
I was like, ooh.
Cut.
First you threw me a curveball with feeder cattle. Now you're going for a rate hike. I was ready to roll with the punches, though. I was intrigued by that.
I actually think it's kind of counterintuitive, but I think if they do lower rates, I think it kind of softens the real estate market and gets things moving there. And I think that actually would be deflationary in a way, believe it or not. So I think we just need more liquidity in some parts of the economy, and lower interest rates, I believe, might do that.
All right, to the realm of our year-to-date movers, listeners. What is lighting it up out there on the year-to-date front? And you know what, listeners? We've been saying for a while that we've done a lot of living so far in 2025. We've seen entire life cycles of products play out over the last few months. Huge rallies, huge sell-offs. And in some cases of one product in particular, both of those within the span of just pretty much 8 months. You did 2 lifetimes worth of living when it comes to that product. But we'll go to the dark side first, listeners. Why not? We've been optimistic all show long. Let's go red because it's just fun. What's number 5 on our list of the biggest losers for the year? It's cash-settled butter. So strap in, all you dairy fans. I'm lactose intolerant, so I laugh at this. This is great. Cash-settled butter. Taking a drubbing. Off 14 2/3% out there, listeners. Number 4, to the land of the ags. Not all ags in the gainers column, at least for right now. Hard red spring wheat coming in. Number 4, off 16.6%. Number 3, back to one of the EMs. Which one is it? Yep, it's lithium, off a little over 18% year to date. Number 2, a product Carley might be a little bit familiar with. It's our old pal Nat Gas, 21 2/3% to the downside. I think the last time you and I chatted, Carley, Nat Gas was somewhere around $3.50 heading into the start of summer. I think it was in June. And that just seemed wrong. It just seemed crazy. It seems like the market realized that as well. They have come for nat gas aggressively since then, and it is back below the 3 handle. You can maybe argue where it should be in this time of year. And then our old pal OJ, another product you and I have talked about a lot and also warned people to stay away from. OJ off 44 1/3%. Carley, cash settled butter, good old wheat, lithium, nat gas, and OJ on our year-to-date biggest losers list. What is catching your eye out there, madam?
So I'm just going to repeat myself a little bit here. This is a commodity deflationary story. Despite inflation in other parts of the economy, as we've already discussed, commodities are not suggesting that. These are products that most people use on a daily basis: butter, wheat, orange juice, natural gas. I think we all use those. Lithium, maybe not, but well, actually lithium probably. So again, a deflationary story. And things that aren't on this list are not looking much greater. Crude oil, some of the other grains. And so I'm going to stick with my deflationary idea.
By the way, you threw our chat for a loop with that rate hike thing. They're all freaking out now. They're
I
like,
know.
rate hike. Whoa.
I'm sorry. It's late in the day. I'm sorry.
Some of them are actually down for it. So there you go. You got a few proponents there. They're like, we're not high enough. Higher they want out there, listeners. I don't think there's any probability of that priced in at all on the Fed Watch, Carley. So you would definitely be alone on that side. Talk about a surprise. If they came in and they raised rates, that would be an interesting scenario. It'd be interesting to see how that. Where would VIX be after that? Where would the markets be after that? Interesting conversation out there, listeners. As we go to the year-to-date winners, and I think you can guess what number one is, even if it did give up nearly 10% this week. Let's see what the rest of our list has in store for us, because this list has actually been evolving quite a bit this year. Earlier this year, I'd say a month or two ago, pretty much the whole list was all metals. It was palladium, it was silver, it was gold, it was platinum, and even copper sneaking in there on the heels of those aggressive tariffs. Looks like, yeah, all of the metals have now fallen from our top 5, which is kind of interesting. Still a good year to be long the metals, but you're not topping our list of year-to-date movers. Number 5, it's soybean oil. Getting back to my comments from earlier in the show about just how wild it has been in the soybean complex right now. Soybean oil up 26 2/3%. Number 4, another combo, our old pal BTC, up a little over 30, about 30.5%. Number 3, Carley's favorite product, it's feeder cattle, up nearly 34% year-to-date. Number 2, one of the metals, I lied, there is one metal still sneaking in there. It's our old pal platinum, up about 44.2%. And the number 1 gainer for the year, and I talked about this before, for some reason our platform is showing it up at about nearly 90% for the year for Ether. That number, I said it last week on the show, that number seems high to me as well. I was doing a little bit of digging on some other platforms right before the show started, including some very readily accessible platforms that some of you folks might be using out there. Like, let's say Google Finance. Google Finance shows Ether up about close to in the ballpark of 30%. And it seems like a lot of platforms are on. MarketWatch has it about 29%. Crypto Rank about 27%. There's another part of MarketWatch that shows it at about 42%. I think that's closer to the actual number. It's somewhere in that ballpark of 40-odd%. But obviously, a lot of moving parts when you're analyzing crypto. You know, which spot venue are you looking at in the case of the futures? Is it a constant maturity future? Are you rolling the front month consistently? So there's a lot of moving parts when we're getting that year-to-date number. But for whatever reason, Ether seems to throw a monkey wrench into our system. It doesn't want to give us. I don't think we're up 90-odd% for the year, but somewhere in that ballpark 40+% range sounds pretty good, and that would still put it at effectively the number 2 behind platinum for the year. That said, Carley, anything catching your eye in our top 5 year-to-date movers? And do you agree with me that maybe that Ether number is perhaps a wee bit overstated, madam?
Yeah, I would agree with you, and I would say I haven't parsed the numbers, but my guess is you're right. It has something to do with the futures role and contango or backwardization. So yes, I think it's probably a futures issue rather than a spot issue.
All right, Carley, and you said at the top of the show, I think you said crypto is your favorite complex. You can't wait to sink your teeth into it some more. Well, surprise, we got some more for you as we head on into the contract specs.
Have you ever looked at a futures product and said, What the heck is that? Let's find out together. It's time to get the contract specs.
All right, everybody, welcome to the contract specs. And this one is actually a bit of a combo of a contract specs and a futures free-for-all segment. So, Carley, at the end of the day, don't blame me, blame our listeners. We had a listener ask us about this, so it's not my fault. Don't get mad at me out there. But this question came in from TTD, and we thought, that's a good question. We haven't really addressed it on the show previously. And also, it seems like a good time to do just that. So to the world of crypto we go, listeners. Let's go out to, again, TTD wrote this in, said, can you give us an update on the Solana futures? Are they putting up much volume? Thanks. Well, the short answer is we have not done that yet on the show out here, listeners. So we can give you the Solana update pretty quickly. The short answer to that is not really a ton of volume. Which, again, we talked just last week. We had the micro ether doing, somewhere in the ballpark of 250,000 contracts and blowing its way into the top 10 pretty easily. Solana, not quite there. Now, that said, we have the big Solana, we have the micro. I'm looking at the big Solana right now, and we're talking about, looks like about 1,700 contracts. So, yeah, 1,700 contracts. Doesn't sound like a lot. Again, this is 500 Solana, so that's a big contract. But that's kind of the ballpark we're talking about here. So not exactly lighting the world on fire, kind of on par with some of the other newer CME crypto products that they've launched out there. I'm going to go out on a limb, Carley, and say you probably haven't had someone from DeCarley call you up and say, get me some of those CME Solana futures yet, have you?
You would be correct that I have not entered a single trade in this product. So yeah, you're right.
Well, then today's contract specs is also going to be for you, Carley. We're all going to learn together here on the show. All right, so we thought what better time than to break down the specs. It is a hot new product, hot in air quotes, because everyone's interested in Solana. The future is not just lighting it up quite yet. But, of course, these were listed not that long ago over there on CME. They also added XRP, which is kind of hilarious to me. XRP was hanging out at 50 cents for the better part of a half a decade. Now trading somewhere around $3, but just funny that they had to have a future for that. But c'est la vie, if you can probably guess, Solana futures, all the crypto products out there, they are cash settled. We did see a big move for physical settlement, physical delivery in the crypto space early on the crypto derivative side. We saw firms like Bakkt and we saw LedgerX both listing physically settled options with the hope that people were going to come in, they were going to write covered calls on their spot or sell puts to get long spot. It wasn't a future, it was on the spot. And what turned out is that people didn't really want that use case. And so it seems like they're pretty much going to go cash settled for the way future. Carley, would you agree with that as well? Do you think, at least for now, it seems like the momentum on the crypto futures side is certainly the cash settled side? People don't want it settling into the underlying?
Yes, I would agree. Makes sense to me.
And you're a broker. You don't want to deal with the proverbial truckload of Solana being dumped on your client's lawn at 2 a.m. That wouldn't be fun, right? Just a whole truckload of Solana.
Absolutely not. That's a hard no.
A whole truckload of digital Solana just dumped on your lawn. Probably one little jump drive. They just leave it on your doorstep. That'd be pretty easy, actually. But I digress. So I mentioned they come in two sizes, and that is the case. We have the big boy Sol Future. That gives you a multiplier of 500 Solana. So that's a big beefy boy. Solana trading somewhere, I think a little bit shy of $200 today. Let's go look. Somewhere around 180. I think that's last I looked. 185. Yes. So 500 of those. Listen, that's a big beefy boy. You got to be ready for the proverbial truckload to come in when you're trading those. And then for a lot of you out there, which is still actually a pretty decently sized contract, we've got the micro Solana doing 25 Solana there. So again, 25 of any $185 underlying is still a decently beefy contract, but that is your micro size. The tick size out here, the minimum tick size is a nickel for each of these Solana. So obviously, if you want to figure out your notional value and your value of, let's say a trade, you multiply by the multiplier. So obviously, the value of each tick on the big future going to be $25, and the value of each tick on the micro it's going to be $1.25. So let's run through a couple of examples here. Let's go to the big Solana future first, aka the 500 Sol contract. You get in at 180, so pretty close to where it's trading right now. I think it's going to rally. You buy a one lot. Sol runs up to $190, so you get a nice $10 on that contract. That's a pretty straightforward bit of math there. You got 500 Sol as your multiplier times a whopping $10, $5,000 in profit on that bad boy. If it goes the other way, drops $10, obviously you're going to lose 5,000 if it drops to 170. So again, 500 Sol is a lot, but just something to bear in mind out there. Now let's say you want to go a little bit smaller. You go the micro Sol route. You come in and you buy, let's see the same price level around 185 or 180, excuse me. Let's say this is $1.25 per tick, remember? And let's say in the case of our example, Solana runs $5 out there. So you're going to do $5 times 125. For some reason in our example, they decided to give you a two lot. So that works out to $250. Obviously it'd be 125 for a one lot. Same deal. If your micro Sol loses $5, you're going to lose $125 for a one lot. And if you decide to do a two lot, $250. So there you go. Carley, do you feel suitably armed now with information to go out and sling a whole bunch of big Solana futures for your clients?
I think you did a wonderful job explaining that. And I will also add, I think the CME did a really great job at sizing this particular contract. It's, in my opinion, they could have done better with previous cryptos. For example, Ether, the big contract's really, really big.
It's enormous.
The micro is so small, you have to trade a million of them to do anything. And, Bitcoin's a little better for the micro, but the big Bitcoin is massive, way too much for most people to handle. So I think this is a really nice sizing job by the CME for these features.
Yeah, it seems like in the early offing, they were really designing their products to be tempting to the pro shares of the world, the ETF issuers, so they could construct, in the case of Bitto, it worked. They constructed a Bitcoin ETF, and obviously they went the same route with Ether. But you're right, they're monstrous. They're not really usable for anyone outside of an ETF issuer out there. So I think you're right. The sizing a little bit better with this one. 25 Solana is still a decently sized contract, even though it's called a micro out there. So interesting stuff out there, listeners. Hit us up. Let us know if you've slung any of the big or little Solana futures. All right, Carley, with that gets us to the end of our journey through the world of futures. Man, we started with feeder cattle. We ended with Solana. Had a whole bunch of stuff in the middle. Kind of a wild journey this week, Carley. Did you have fun?
I did. A very well-rounded show. Thank you for having me.
On a little bit of everything out there this week. Coffee, RBOB, just lithium, soybeans, and you name it, corn. A little something for everyone out there this week, listeners. And Carley, if folks are intrigued, maybe they want to sling some size Solana or feeder cattle or anything else, and they want to contact DeCarley to do it, where should they go? What should they do?
You can visit our website, DeCarleyTrading.com. It's DeCarley Trading. You can sign up for a free trial of our newsletters. You can kind of get a feel for some of the things we're doing. And if you're on social media, check us out on X. The handle is @Carley Garner.
I'm looking forward to all your tweets looking for a rate hike, Carley. I do dare you just to put one of those out. I just want to see what the response would be. Twitter, usually known to be a very level-headed place, especially when it comes to bold financial predictions. So I think they will respond responsibly and in a measured, level-headed fashion. What do you think?
And they'll be very kind as well. Very kind.
How angry would you be with us if we tweeted out that you called for a rate hike on our show? that would
trust me. I've taken more abuse.
It would certainly get you some clicks. That's for sure. We would never do that to you, Carley, but it was fun nonetheless. Check her out over there at DeCarley.com. Maybe you need a hand with your feeder cattle position. She could certainly help you out with that. We all learned about Solana today, so we could certainly help you out with that as well as, of course, all your other standard, your equities, your rates, all the other fun stuff you folks like to sling out there. Speaking of you folks, we're not done today, not by a long shot. We'll be back in about exactly an hour to break down all the wild activity going on in the world of options today with the newest addition to the network, Thor, aka the Hot Options Report. Then we're back again tomorrow with our usual triple header on the network now, the option block with the Flow Master, This Week in Futures Options with special guests, and then, of course, the Hot Options Report. Friday, no live vol views. It is a big day here on the network behind the scenes, so got some other fun stuff going on. So no live vol views. We'll see if we can get you some fun VIX options, spotlights, and all that other fun. And then back again next week, all the way through to another great episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.